We're joined by Nick Nelson. Nick is a strategist at UBS. Nick, thanks for coming. Great to see you as ever. Right, so let's just look at the main themes as we head towards the new year and beyond.
So I think one thing we're going to be focusing on is profit recovery. Okay, so we've had 2.5 years of earnings downgrades, companies missing numbers, and just about the middle of this year and in Q3, we're starting to see earnings beat, and we're starting to see top line recover, and I think that'll be a big
That's the key, isn't it? That
of course.
It's the revenue side which is actually now key.
Yeah, because companies can't cut their costs to profitability, right? If you cut your top line, that's probably your cost, sorry, that's someone else's top line. If you lay a worker off, they're not going to buy your product. So you need to actually see the top line recover, and I think the signs of that happening.
This is not universal, though. There must be some industry groups doing better than others.
Yeah, I mean, initially you've had obviously strong demand for commodities. Commodity prices are much higher, so miners, metals, oils.
I think miners can keep on going like they have been.
Well, they've had incredible leadership. I think one thing that will change in 2010 is you will have a much more balanced market. It won't just be miners and banks and cap goods. It'll be broader. Perhaps even some of the defensives that have lagged, like pharma, may start to come into the mix. So I think it will be a broader market.
Yeah, when you say that, I mean, what about some of the banks which have been left behind? Let's say the ones which, you know, it's been a tale of two banking sectors in essence, hasn't it?
Yeah, and I think in any sector, you can see there's been the stocks that have gone very well since March the 9th. In general, it's been smaller cap. In general, it's been lower quality stocks in some cases. And I think the time for the large cap stocks, slightly more defensive, slightly more growth than value, to come back, I think that's really the time where we know we're right for that.
Yeah, now. I'm just looking at some of your key calls here as well, and I noticed one of those which has been left behind as far as the financials go is Lloyds. What's your thinking here after that rights issue?
Well, look, the thinking here is basically if you look at what the bank can earn on perhaps through the cycle and mid-cycle profitability, it looks very attractive on those measures. We would argue that, say, the UK domestic housing market, which is obviously one big concern at the beginning of this year, the last 6 months house prices obviously in the UK have been rising, not falling, so some stabilisation there will mean obviously lower peak MPLs than perhaps people had expected. So general improvement in the macro environment and in the UK would be beneficial.
Read Elsevier as well, well, very broad publisher.
Yeah, so this is perhaps the idea that some of the more defensive, professional publisher is not as cyclical as obviously some of the other media stocks. Some of these companies look interesting and carry decent dividend yields. It comes up on many of our screens for high dividend yield stocks with secure cash flows to support those dividends.
Amongst telecoms as well, I think you've got here KPN in the mix.
Exactly. So look, I mean, I think that for us it's the valuation, it's the potential interest its assets have to perhaps other telecoms in the sector, potential for consolidation in that space. There's a few drivers we have in there.
AstraZeneca, not Glaxo, why?
Well, look, there's the pipeline issues. Astra's obviously a very cheap multiple. People are very concerned about the pipeline. We think actually that when you look into the future, there's a few of the products that might come through which would give you a big uplift to earnings. So you look at the dividend yield of over 6%, it seems quite interesting.
Quickly, Syngenta, an environment climate change play?
Partly, but also just bits of the agro business. We think, again, is a quality business that's been, the valuations have come down to very attractive levels.
Nick, great to see you. Have a fantastic holiday, if you are having one. Nick Nelson from UBS.